I am AI Avatar of CA Ratan Mundara. A major temporary relief has been introduced for eligible SEZ manufacturing units. Under the SEZ Relief Window 2026, qualifying units can sell manufactured goods into the domestic tariff area at concessional customs duty rates for a limited one-year period. This measure was announced to address underutilization of manufacturing capacity arising from global trade disruptions. The relief window is a special one-time, time-bound concession. It applies only from 1st April 2026 and ceases after 31st March 2027. The concessional duty rates are notified under Notification No. November 2026, Customs dated 31st March 2026. Not every SEZ unit qualifies. The benefit is available only to SEZ units that had commenced production on or before 31st March 2025. At the time of DTA clearance, the unit must produce a certificate from the Jurisdictional Development Commissioner confirming the production commencement date, export FOB values for the previous 3 financial years, and prescribed value addition details. The unit must also declare compliance with all notification conditions and undertake to pay full duty if those conditions are not met. 2 major exclusions stand out. First, units in free trade and warehousing zones are not eligible. Second, traded goods are not eligible. Only goods manufactured by the SEZ unit can claim the benefit. Imported goods cleared as such or after use are specifically excluded. For this relief window, manufacture means making, producing, fabricating, assembling, processing, or bringing into existence a new product with a distinct name, character, or use. Mere refrigeration, packing, repacking, affixing labels or logos, repair, or refurbishing do not qualify. Inputs include raw materials, intermediates, components, consumables, parts, and packing materials. Capital goods are excluded. The FAQ provides a concessional duty matrix. For example, current duties of 7.5% reduced to 6.5%, 10% reduces to 9%, 12.5 or 15% reduces to 10%, and 20% reduces to 12.5%. Duties above 40% receive no change, and lower slabs such as nil, 2.5%, and 5% also remain unchanged. The table on page 3 sets out the full structure. Table I covers cases where only basic customs duty is notified at concessional rates. Table 2 covers goods where both BCD and AIDC are notified at concessional rates. The FAQ also clarifies that certain goods already covered under existing exemption notifications can still fall within the new framework, and says units may choose between this relief window and other available exemption notifications, depending on what is more beneficial. The benefit is not unlimited. The total value of goods removed to DTA in a financial year under this relief window cannot exceed 30% of the highest annual FOB export value of manufactured goods in any one of the 3 immediately preceding financial years. Also, the goods must achieve a minimum value addition of 20%, calculated using the prescribed formula based on assessable value, imported input value, and DTA procured inputs. The FAQ makes it clear that duty drawback or other export benefits under the foreign trade policy are not available on inputs used in goods cleared under this notification, whether claimed by the SEZ unit or by the supplier of those inputs. The unit must produce a Development Commissioner certificate with each bill of entry, although the certificate may remain valid for multiple consignments during its validity period. The FAQ states that the certificate includes registration code, ISE, production commencement date, export values for the preceding 3 years, value eligible for concessional duty, CTH codes, CTHY's value addition percentage, and FTW status. If details change, such as new CTH codes or revised value addition percentages, the certificate must be reissued. For these concessional DTA clearances, the bill of entry for home consumption must be filed by the SEZ unit itself through the Common Customs electronic portal. Assessment will occur through faceless assessment, while physical examination, if required, remains at the SEZ location. Bills are routed through RMS to designated faceless assessment groups. The DTA buyer cannot file the bill of entry, and amendments can be made only by the SEZ unit that filed it. Queries will be raised and replied to electronically, and all documents are to be submitted electronically. Non-assessment functions such as registration, inspection, examination, and out-of-charge continue to be handled by officers posted at the SEZ location. If the manufacturer does not opt for this concessional window, the mandatory faceless assessment requirement does not apply and assessment can continue under the existing jurisdictional SEZ procedure. Units claiming exemption under this notification will also be subject to periodical audit under Rule 79 of the SEZ Rules, 2006. Moonsiz and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence. a pioneer in establishing SEZ and IFSC units within Gift City and India, delivering end-to-end IFSC setup, operational support and handling complaints, risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BAT, and ancillary regulations, and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.